Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your 2-hour late daily cryptocurrency market update. It's been a very busy morning for me, so I've just we managed to trade a little bit this morning. We're out of the trades and probably done for the weekend, finishing the week off in some profits. But I just wanted this daily cryptocurrency market update to be essentially quite a technical one. I've seen lots and lots of people calling for this recent rally that we've had to be nothing more than a fake out. And I think it is a fake out, but it may not be as weak as some people. What I'm trying to say here is I think there is room for a further continuation to the upside for the crypto space. I'm going to explain why in this video. This does not mean that I think the bear market is over, and you guys know that we think that lower prices are somewhat imminent. However, this rally that we're seeing may get a bit of momentum behind it, only to get smashed down at a later date once all of these self-righteous commentators on the market have been wrecked trying to short it. We called for the short squeeze that started this rally off, and I think there's definitely the room, and we're going to drop down to the smaller time frames, providing certain things happen, like the Dixie stays rather floppy, and we actually get above the resistance that we're currently at, for this rally to see a bit of an extension. That isn't a given. You guys know that at the moment, really, we're not even swing trading. From an investment point of view, we're cash, US dollar cash. And from a trading point of view, we're very much just day trading, trying to earn passive income. And we're doing that to a degree of success. And if you want to get on board with that, you can check out the link in the description for my Patreon. Trading is something I do every day, and I don't mind sharing it with you guys and talking through what I'm doing. It's a good way for you guys to learn. Also, there's lots more in there, like portfolio managers. Very investment-focused Patreon, but we also do day trading as a kind of side thing. I also want to spend a little bit of time destroying this article. Will Bitcoin hit 110K in 2023? 3 reasons to be bullish on Bitcoin right now. I'm going to be destroying this. And we're going to be destroying it not just by telling you that we think this is nonsense. We're going to be, could this happen, right? I would be, and you can never be 100% certain that something's not going to happen. But these 3 reasons this article puts forward for Bitcoin going to 110K next year, I think we'd have to see another, and they do cite March 2020 here, given the recent sort of spill that we've had. But we'll talk about that. We'll look about the divergence that they're talking about on the sort of RSI and why actually, we've seen these kind of divergences before, and they are in very different contexts. Why did the markets rally from March 2020 onwards? Well, there was a whole monetary reason behind it. We knew that the governments and central banks around the world were essentially going to come out and proliferate the money supply and pump markets full of money. We've shown you. You guys know every single day we talk to you about how important understanding liquidity is. It is the key to being a good investor, ladies and gentlemen. If you can understand the flow of money and where it's going and where it's likely to go and where it isn't, you will make money as an investor. And that's how this channel is different from the rest. And it truly is, guys. And hopefully we're showing you that. Let's start things off before I destroy this article. And no offense to whoever's done the TA here, but TA is a lot of the mainstream TA that you see on these big channels it's not very good, and it's not critically thought out, and a lot of it relies on indicators that are lagging, whereas somebody like myself trades price action. We do use indicators, but as a kind of confirmation to what we're already seeing. So I want to start things off by looking at the hourly chart. Where we've left off with you guys was we essentially were calling for this break to the downside of this pattern. We also called for this break, which was the FTX spill. So it's very common you get a push to the upside before you see that downside continuation. Go and look at the prior areas in this bear market before you've seen a capitulation. Typically, the market will always shake not very well positioned shorts out. And it's what we had here, ladies and gentlemen. We were calling for this short squeeze, absolutely nailed it, traded it. And essentially, the reason we knew you were going to get a short squeeze here is not only did you have this area of resistance, there's a saying out there that you guys should remember, is you don't short support. From a risk to reward point of view, it doesn't make a lot of sense. Actually, the long would have made more sense if you were day trading and scalping, and certainly as you have this double bottom. Remember this pattern here, ladies and gentlemen. This is a pattern that I traded today on Chainlink, and we made some money from it. You will see this time and time again. However, I'm seeing lots of people call for this as a fake out. This rally is a fake out, and it's going to lead to imminent downside. Now, that is possible. However, I think when something's obvious and when too many people are excited about something, the market will take money from you. And this is why we're not aggressively shorting here, even though technically support, support, support. This is a grind line. Grind lines are very important in technical analysis. You notice we call it a golf ball. You're essentially, running out of momentum. You spill to the downside. You come back. Everybody gets short here. We saw a record inflow on coin shares. Boom, pop goes the weasel, and it goes against you and takes all your money off you. Certainly if you're using any leverage. I know this through making that mistake 1,000,001 times, ladies and gentlemen. So, when you start trading, you'll feel like the market is hunting you. You'll feel like your stops are constantly getting hit just before it turns the other way. And this is because people group think, and how humans think, and the psychology with humans plays a massive role in markets. This is where we're different, because we try and take as much emotion out of trading as possible. And there's always going to be emotion there. Anybody that tells you they're an emotionless trader is telling you that they're not a human being. And maybe there are some psychopaths out there. I do believe that. But typically, you are going to get emotion. So if this rally is to continue, you need to break above what was a grind line that you've spilt below. This, at the moment, looks like perfect support and resistance. The issue for me is, why would you short here? Because where are you? You're at support. You're at a bloody good support that you've seen a number of interactions with for a while now. Now, okay, you do something like this, you come in lower, you're likely going to get a bounce again here, but it may be a less momentumous one, and then you're going to see that downside. However, if you hold, and I think from a short to long perspective, if you're looking at risk to reward and a good setup, which is how I trade, I personally, potentially you've got a head and shoulders here, actually. We'll get rid of this one. I personally wouldn't take this short just yet, okay? Now, if the dollar stays a little bit weaker, although this looks like a nice right rounded butt cheek, from its sort of pullback, this may see the markets, certainly the stock market and the cryptocurrency market, actually get a bit of a bid. Gold's down today, the futures market's down today, the UK market's down, the Asian markets are mixed, marginally down though. So that kind of points the direction of crypto in the short term. But I think if you hold this, and remember these levels, guys, you can hold this level here, okay, round about 16,374. We'd be looking at longs, and certainly if you start to top out here. So if you start to do something like this, we're looking at longs, and we are potentially looking at a rerun. Something like this would not surprise me at all, because, okay, you had a retest there, but maybe you get a double retest, and then you get the capitulation to the downside. So people calling for this as a fake out, I think, are somewhat prematurely doing it. I think you need to let the market... Does it make sense from a risk to reward perspective shorting here? Yeah, if you were trying to day trade, you'd do something like that. I mean, you've got a decent stop there, coming back down and running these lows. But actually, for me, as somebody that doesn't want to be on the position that everybody else is on, the obvious, the risk to reward is actually far greater here. You know that you've got support. Wouldn't you try and aim for some targets up here? Maybe you go for the big one and try and do a swing short. Now, I'm not saying that's going to happen. It depends on a weak dollar. The dollar is popping its head back up today. You guys know I ultimately think the dollar is going to go on and make new all-time highs. Everybody's calling for a dollar top. Well, understand the FX market, and you will understand why the dollar, which has the most amount of debt out there in the world, is going to be stronger than currencies that have less debt with less interest rate, meaning that there is a less of a bearing effect on it. You'll understand why the dollar will be king, essentially, and continue to be king, unless we see some sort of, perhaps Russia and China going on and starting to use gold or commodity-backed currency, and then there's all these things that you've got to watch out for. Some interesting news as well before we dive into this article, and we'll go through each point that they make. Destroy it is probably not the right word. It's very I shouldn't use stuff like that when it comes to looking at somebody else's TA, because there is a divergence here. I trade divergences. I just think that the broader context, and I think they're clutching at straws here, very much so, in my opinion. But we will talk about that. I also want to bring this up. This was some big news from the past 24 hours. MetaMask will start collecting user IP addresses. So this is the way that crypto is going, ladies and gentlemen. If you think cryptocurrency markets are going to escape regulation, in my opinion, you are wrong. The governments around the world that keep you in the state that you are in as a human being will never allow you to transact money freely or value freely. The reason being is because they will not be able to tax you. They need to tax you and need to extract money from you to keep you in the state of being that you are in. It is my opinion that the way life is currently set up is not the way that it was meant to be. And you can look at your governments largely to blame for this. In the UK, the highest killer of men in the UK is suicide. That tells me there is something seriously wrong with the world, and certainly how life is done in the UK. And I believe that people are linguistically programmed and almost living in some sort of a schizophrenic, some sort of a schizophrenia in terms of how they think life is. I do not believe as human beings we should be living the way that we are. And part of them keeping people in the state that they are in is through making sure that you have to go to work because you have to make your car payment, your mortgage payment, you have to keep the bills on, you have to keep your kids in clothes, and you know, you have to feed your family essentially. And they do this through stacking the chips massively against you. They tax you and extract from you at every single point, ladies and gentlemen, and they are never ever going to allow you to have your own money that you can transact with one another without them taking a share of it. Now, I'm not against taxes. I'm not against government necessarily, but I'm against an overreaching and a strangling and restricting government that largely actually in many ways doesn't serve the people. I think there's better ways to do things. And again, going back to the point that I just made, I think largely the lives that we live are not how human beings are meant to live. I think human beings are special. I think we're all very, very special, some more than others. But and I mean that in a kind of joking sense. But the way that, you know, I'm getting way off topic. Hopefully you guys don't mind me having these little rambles. Let's move on to this article. So just to recap, I can see a bit more of an extension if the dollar stays a little bit weaker. Let's talk about this article and the 3 reasons it gives to be bullish and expect Bitcoin to go to 110K next year, which, by the way, guys, is a month away from, we're a month away from next year. So they're essentially got a 13-month timeline. You could maybe see that if the governments have some sort of a capitulation in the term of having to do a mass printathon, or something goes wrong with the monetary system. Something major's got to happen for it to go to 110K. Even though we're bearish, we're not betting on the worst case scenario because we've not seen it yet, but we're keeping it as a possibility, and certainly in terms of risk. So just remember very quickly on the TA side of things, you hold this historic support, you're looking for your long, you break it, you're coming down, you're looking for the downside, and you're looking for these levels here, and then you can just basically range to range, chop it up. Let's get into this article. Bitcoin is printing significant bullish divergences with BTC price in line for a massive bull run. New analysts argue. Got too excited there. Stock rally could produce 110K BTC price. So it goes on to say that essentially Bitcoin moves as a risk asset, not like gold, although there is a correlation there with gold that they are not mentioning. When the SPX explodes higher in a blow-off top towards 5,700. Oh, hold on. Slow your horses. So they're calling for a blow-off top for the S&P up here. So how are we going to refute this first? So yes, if the stock market goes up, the liquidity is going to have to dictate that. The only way this happens is if they bring interest rates down, which frees up liquidity from the debt markets into other markets. They'd also need to go back to stimulating for this to happen, in my opinion. Money does not evaporate. It just moves from one place to another. It's like water. This is liquidity for you, ladies and gentlemen. They're calling for a rally all the way up here for the stock market in 2023. So we've got a year to do it. Let's talk about why it's not going to happen. Now, I can't say with 100% certainty it's not going to happen. Maybe it does. So we're calling for a 42% upside by here. Okay, why do I think this isn't going to happen? Well, we're going to bring up our good old friend, the unemployment rate. Oh. So this is for the United States of America. Happy Thanksgiving, everybody. I hope you all had an amazing Thanksgiving. You know, I think it's a good time whenever anybody's having a holiday and enjoying themselves and spending time with family. I think that's great. So this is the unemployment rate, ladies and gents. Let's put it into a nice red color. And let's put the S&P over it. Just to be annoying here. So they're calling for... This is the S&P. I should have put the S&P in red. Forgive me, guys. It's going to be a slightly longer video as it's later, and it's kind of going to be a video leading on to the weekend. Let's put unemployment in a nice... Let's do white. I'm joking. Let's do black. So... The correlation here between unemployment and the stock market is apparent. It's something we've gone over on this channel many, many times. I'm just going to destroy all three of these arguments, and then I'm going to love and leave you to your weekends. So when the unemployment level, which is currently at a low, is at a low, historically, so low point here, which is where we currently are, stock market at a high, low point here for unemployment. Low point here for unemployment, stock market at a high. Low point here for unemployment. This is obviously before the 2000 and the dot-com crash. So unemployment at a low in black, stock market at a high, and the correlation is vice versa. Unemployment at a high, stock market at a low. So unemployment at a high, so unemployment's gone up, stock market is at a low. You can see the correlation here pretty much perfectly again here. There's a bit of a lagged effect. Unemployment at a low point, or sorry, stock market at a low point, unemployment at a high. Stock market at a high point before the March 2020 crash, unemployment at a low, and then you see this huge spike. Again, this is unemployment at a high, stock market at a low. Unemployment's currently at a low, and I think it's going to start ticking up. So if the stock market was to get that blow off top rally, you would need to see unemployment do this. And then the stock market would do this. What are the chances? What are the chances in this recessionary environment where everybody's broke everybody's skin? Companies are, we've seen it, all your big companies are destroying and cutting off jobs left, right, and center. They are going around with a holy sword and saving their earnings by cutting wages and cutting costs where they can. So I would argue that it's not very likely the stock market's going to rally unless we see interest rates go back straight to zero and we see the economy get stimulated again, which means everyone's going to be employing and there's going to be mass expansion. In a time period where things are restricting, that is not the case. You do not see unemployment fall extremely sharply. Maybe we all end up in UBI. Maybe that's something that this guy is essentially calling for. So we don't see this rally taking place into 2020. 3, and we don't see Bitcoin going to 110k. Could it happen? We've spoke to you about the catalyst that would mean it would happen, and there'd need to be something major taking place, ladies and gentlemen. And actually, in the short term, yes, we do see Bitcoin, and short, we're talking a matter of weeks, maybe having a bit of an extended rally, but in my opinion, everything bleeds out as liquidity continues to get sucked out of it. Let's take a look at the next thing that they're looking at. So they're comparing where Bitcoin is today. Get rid of all this. Get on the weekly. Comparing this drop for Bitcoin today with March 2020. Are they? No, they're not. Yes, they are. So this is March 2020. This is the, obviously, we know what led into this, the mass lockdowns. And they're comparing it with what happened today. Well, why did we get the rally that we got in March 2020 onwards? Let's bring our old friend, the M1 money supply, in and take a look at it. And you can see that this is clearly why. Because the government's printathon and printed loads of money, and it was every single market that went up. Let's take a look at the stock market. Did it do the same thing? Oh, yeah, it did. So are you calling for the government to print loads of money again and pump the markets? 2 out of 2, guys, there. Let's go on to the third one. You have to have reasoning behind what you're doing. Hope and a feeling and a thought need to be backed by sound reasoning and critical thinking. If you don't have them, you're going to be very disappointed. Very disappointed indeed. And he's calling for a divergence that happened there. I can guarantee that divergence was also present here, like what we're going to show you in a second with them quoting the RSI. So the RSI, bullish divergences. RSIs are fantastic, by the way, guys, for divergences. We've got a whole series coming up on indicators. I've gone through basically every single indicator that there is for Bitcoin, for the stock market, for the FX market. And I use some of them, but they're secondary to me. So price action comes first. What I see in the chart comes first. What the tape tells me comes first. Price action is secondary. So let's take a look at the RSI. Let's bring up the RSI. RSI. Have we got any indicators on at the moment? No, we don't. RSI, relative strength index. Get rid of the money supply. Let's say what they're saying here. So they're calling for a bullish divergence. So a bullish divergence occurs where the price is making lower lows. Get rid of this. Sorry, guys. Forgive me. Put that back on. So this is what they're looking for. Bullish divergence. Price is making lower lows. The RSI does not confirm it. Bearish divergence. When the price makes higher highs, and you guys learn something every single day on this channel if you stick around. Price is making higher highs, and the bullish divergence is making lower lows. So they're calling for this as a sign of upside. Maybe. Maybe not. You know? You had bullish divergence here. It wasn't really a bullish divergence because the price correlated. But this is... Okay, so... The argument that I can put forward here is they are correct. There is a bullish divergence here. But this doesn't signal a trend end, in my opinion, because the RSI, I think, may do something like this. If this isn't already the bounce that we've had, maybe it does something like this. And then comes down and puts in a lower low, but stays intact. Where would I be willing to... Would this potentially be a signal? If your RSI came in and put a higher high than here, okay, then the market's showing us some strength. But just because you have a bullish divergence doesn't mean the price is instantly going to follow. And there are examples going back where you will see a bullish divergence taking place. Here's a good example of a bullish divergence that actually worked out. But it's not even really a bullish divergence because the price was in accordance with it. So this one I don't really have that much criticism for because it is a bullish divergence. However, you know, you compare a load of other indicators that would suggest otherwise. And I think actually going back to the start of the video, this bullish divergence, get rid of that now, lines up with what I'm calling for in regards to this actually holding this level of support. You don't short support. Holding as exactly that. We've spilt below it. We've got everybody really excited about the shorts. We've wrecked them. We're coming back up. We're retesting this trend line. We're now holding this support. You hold this. You're looking for the upside. And maybe that's what the bullish divergence is giving you a calling to. Maybe you come here. And then what are you doing if you come here? Well, you're retesting a greater area of resistance that may have now, or support that may have now flipped to resistance. And we see some sort of deviation. We come down. And at this point, guess what every YouTuber's come out and saying? Oh, the bull market's back, guys. It's time to rock and roll. That bullish divergence was right. In my opinion, this is not the case. And what will spur this bull market on? Will there be an element of the halvening? Of course there will. People get excited about it and the price will show that. But more so, what will turn this bull market around is them lowering interest rates and freeing up liquidity into these markets. Article done. That's all I've got for you in this video, guys. Enjoy your Friday. It's been a really busy week for me. Apologies for this being late. I had to go and pick up a cooker and install it myself, which was bloody interesting. I'm not a very DIY kind of guy. But yeah, all I've got for you in this video, guys. You enjoyed the content, like, always appreciate it. So as a comment, make sure you smash that subscribe button. Go check out my Patreon if you feel obliged to do so. We do not want people to join that don't want to be there. You need to want to be in the group. You need to be committed to being a serious investor and a trader. And then we're happy to have you on board and, you know, share our investment ideas, thoughts, and so on and so forth. All I've got for you in this one, guys. You enjoyed the content. Again, like, always appreciate it. So as a comment, make sure you hit that subscribe button, guys, because this channel is going to really set itself apart from the rest in these kind of market conditions. All I've got for you. See you in the next one. Have a wonderful Friday, guys.